Hi, I'm Michael Newrock and welcome to the training lesson Trend Trading Rules. This is all about trend trades. They're probably the most dominant form of trade setups that occur as far as their ability to maximize pips, but you do get probably more swing trades than you do trend trades because you can get swing trades within a trend, but you can only get one trend trade per trend. So we're going to take a look at the basics of this. Of course, we're going to go over it in more detail and the examples and in the rules of the trading system. The system trades the M5, that's the 5-minute, the M15, 15-minute, the M30, and the H1 and the H4 time frames. So it's the 30-minute, the 1 hour, and the 4 hour as well. Can you trade the 1 minute? Yeah, sure you can, but I would strongly suggest to start off with looking at only conservative trades with the 1 minute. It's really the realm of chaos almost on that 1 minute time frame, and you want to really position your targets appropriately. So the shorter the time frame, the smaller the targets you go for, but also the smaller the risk. And on the other side of the coin, can you trade the daily? You sure can. If you wanted to trade the daily, you're best off to change the higher time frames to daily, weekly, and monthly rather than the default, which is the 4 hour, the daily, and the weekly. But you can certainly do that, and that's on the opposite side of the coin. You want to leave a lot more pips for it to room to trade. But fundamentally, the system trades all time frames all exactly the same way, and the trade assistant can take those trades all on a dynamically generated basis. What I mean is the stops will be dynamically generated, as will the targets, other than the first 3 profit locking targets that you set yourself. But you can trade the whole range of time frames, and that's one of the beauties of it, of being able to catch those trends on all those different time frames. So the system determines what the trends and swings are on the 4 hour, the daily, and the weekly higher time frames, and uses the trend follower, moving averages, the profiteer MACD, and the RSI and the stochastic indicators to validate trade setups. Entering trades should only be made at the close of the bar on the chart, providing the entry setup. So you don't want to take the trade until the candle or the bar of that particular time frame that you're trading has closed. There's a little saying, "Close is king," that relates to trading, and that it certainly is. So you want to make sure the bar or candle has closed, and of course the trade assistant will not alert you to the trade until that occurs, nor will the indicator, of course. So stops should be placed just above the slow moving average for short trades or sell trades. If you want to give the trade more room to move, position your stop 5 to 10 pips above the slow moving average, and the trade assistant can handle all of that for you as well. It's very customizable. Obviously, the higher the time frame, the more pips you may want to give it room to move. So you may want to move it 10 to 20 pips above the slow moving average on, say, a 4 hour trade. And on a daily, you want to give yourself a little bit more room even on top of that. Now, stops should be placed just below the slow moving average for long trades or buy trades, or 5 to 10 pips below the slow moving average if you want to give the trade a little extra room to move. Again, same rules apply. The higher the time frame, the more you should make or give allowance to that trade to move. You can stick to just the slow moving average for the placement of your stop, but if you want, you can always give it a little bit more room to move with a few more pips above or below the slow moving average, depending on if it's a sell or a buy. So targets should be set to a minimum of 1-to-1 relative to the stop loss. In other words, if the stop loss is 30 pips, make the target a minimum of 30 pips. Now, this is a fairly simplistic guideline at best. So we go into that in a lot more detail in other lessons. But if you have your hard targets set to close the trade, then 1-to-1 really is the minimum. However, if you see some counter signals, there's no real rules in trading. For example, if you see some counter signals occurring, like maybe the trend follower changes color against your position, or the high time frame overall trend direction indicator changes from one color to another against you, or the moving averages crossover, then if you're on profit, you can either do one or two things: tighten your stops very close to the current market price. If it moves against you, you're going to make some money or some pips, or close the trades and take the profits at that particular time if you are in profit. But the thing that I'm getting at is don't. I've had a lot of different trades, and I've seen it countless times where the target will be almost reached, but not quite there by ridiculous amount of pips, 2-3 pips. I've seen it down to half a pip or less, and then it moves against you, and the next thing you're looking at is a big loss. You don't want that to happen, so don't let the rule of having to reach that 1-to-1 minimum deter you from closing the trade or locking in profits just because it's a little shy of that target. Over the following lessons, we're going to cover the trading rules for conservative trend buy, conservative trend sell, aggressive trend buy, and aggressive trend sell. We have a lot of examples as well in the members area. Of course, it's always really good if you can look through the forum at what other examples members have uploaded, or upload an example yourself, and I'll give you my view on that particular trade setup, whether it's good, bad, or ugly, and I am sure that other members will as well. So optional filters include, and these are all more fully gone over in detail in the Goldilocks zone that's in the advanced training module. But optional filters include: the price must be a minimum above the fast moving average when buying, and it must not be a maximum above the moving average crossover when buying. In other words, we want it to be not too close but not too far to the inception of the trade, hence the Goldilocks zone. And conversely, the price must be a minimum below the fast moving average when selling, and not be a maximum below the moving average crossover when selling. So again, we cover that more fully in Goldilocks zone, and in the following lessons we'll go over straight trend trading in both conservative and aggressive environments. The profiteer trend trade is based on the core concept of moving averages and how they relate to each other, as well as momentum within the market. That's very simplistic, but I look forward to going over these trend trades with you in more detail in the next 4 lessons. Alrighty, well, thanks for watching, and as always, there's a copy of, or there's a PDF download underneath this lesson, as well as the ability to download the video. There's a couple of tasks for you to consider, some FAQs, and a link directly to the forum in the specific section that will be discussing this particular topic. And of course, the weekly webinars and chat room. I look forward to seeing you there. It's the participation of the group that's going to be, excellent and very positive for everyone. So until next time, good trading, live well, and I'll see you soon.